Hello, master traders. I'm looking at SPY on the 30-minute chart. How we doing, my fellow master traders and chartists? How we doing? I mentioned probably yesterday's video that we could get a gap down or a gap up, a breakaway gap down or a breakaway gap up, and well, we didn't get either of those. We didn't get a gap up, a breakaway gap up, or a breakaway gap down. And breakaway gap downs and breakaway gap ups, it's when we gap out of a structure. And I was watching, like, when we had that big selling pressure from CPI getting released, I was wondering, is this the start of a breakaway gap, a bearish one? But when the market opened, once again, they decided to trap us, right? They decided gap down, gap down. Remember when we had this gap down? They bought the dip. Gap down. They bought the dip. Gap down. Once again, they bought the dip. Okay? I'm not too surprised because the market makers, they love to trap us. They love us. When I saw this breakdown, the first thing that came in my mind was, hey, we got to be careful here because they might be trying to trap us. It's like my brain is just wired that way. I don't trust this market. So I'm always looking for the traps. If you guys watched yesterday's video, I think I was talking about that. Like, oh, guys, we got to be careful. They might try to trap us. And look what happened intraday. And I have a Discord where I try to give the best guidance, price action guidance I can throughout the day in real time. And I wrote here, 600 is first resistant. If it clears 602 and 604 in play, if below 600 is, which is overall bearish, to trigger more downside, 598 must fail. So I was watching it to see what the market wanted to do. Is it going to take out the 598 level, which was this green line right there? I just changed it to green. Or was it going to take out the 600 level? As you guys can see, the market decided to trap us. Anybody who got bearish got overly excited with that gap down from CPI. Maybe you were chasing. Well, they trapped them. They trapped you guys, okay? And I'm really sorry that happened. But hopefully, we can learn from this experience, okay? Like Uncle always said, we need to align ourselves with the traps. Trade with the traps and try to be on the right side of the trap because that's what they love to do. The market makers who provide liquidity for this market to move up or down, they do manipulate the price and they love to trap us. That's why the false breakdown and the false breakout are my favorite trade setups. And yeah, they broke out 600 and they continued upwards. They continued trapping the bears even as they made their way to the upside with more false breakdown before they pop up. Okay, but overall, I mean, it was good for a day trade, but you look at the daily chart, no critical level was really cleared or anything like that. But I do have another structure, another trend line from January 13th low connecting to February 3rd low and yesterday's low, February 12th low. Okay, that's 3 touches. But can it lead to a test to the upside of this trend phase, this chop phase that we in? I do have this trend line. To break out, it would need to get above 608 at this point. Yeah. But I do want to say this, even though I have a new trend line, I know some people don't like that very much, but you got to update your trend lines and structure as the price action updates, right? And it's still getting tighter. You guys can see it's still getting tighter. So, I mean, we're still overall chopping, but I don't think for much longer. It's getting tighter and eventually, maybe next week, maybe today, maybe tomorrow, but it is getting tighter. And eventually we are going to break this structure and we're going to head to the next leg, that next trend phase. And you guys are going to love it. If you guys are able to make money in the chop phase, you guys are going to love the trend phase because the trend phase is a lot easier to trade. We're not there yet, but we are getting there, okay? So anyways, let's identify the levels and prepare for the day, okay? Once again, the market makers allowed the price to close above that 602 fib level. Okay, we had an inside candle set up as well. Bears needed to break down 600. They gapped down, unfortunately for them. that 600 level was also recaptured. It looks like a stop loss hunt, if you ask me. But if it is a true stop loss hunt and it's going to lead to more upside, we got to clear some more resistant level. I have 604 as first resistant, but the critical one that I need you guys to see is the 605.5-ish area. Okay, this yellow line right here. I'll change it to orange just so you guys can see what I'm talking about. The orange line is the critical resistance level. If we happen to clear 605, nice move for the bulls, but the main level needs to clear is the 605. You guys see multiple times for 2 trading days, even 3 if you counted CPI. There's been a lot of selling pressure from that area. So if you want or expect Uncle Chartist to get bullish or lean bullish, I need to see that critical sell zone clear. I need to see it clear. I need to see this sell zone become a buy zone. And then I can lean bullish, okay? As of right now, that's the level that I'm watching. If I am to switch over to bullish, it must clear. And as far as being bearish goes, you guys see multiple times as well. You see this yellow line? That's the 602 level. Multiple times this level was respected as support, even yesterday and this morning. Okay, we can count this CPI drop down over here and recapture. Maybe it was a stop loss hunt, but either way, that 602 level is still a critical level to watch, and as well as that 600 level, which bears have yet to break down. I need to see those levels break down on the daily chart. Higher the time frame, the better to put those lower targets in play. 598 area served as a tough buy zone yesterday. Okay, there was a lot of buying pressure that came from that area. So these are all support levels that I'm watching. 602, 600, 598. The price actions behavior must be bearish for me to be bearish. And breaking down those levels would indicate that to me. Okay, so as usual, watch out for the traps. Right now, it looks like bears are getting trapped. And if they can clear 605.5, that should trigger a move higher. Okay, but if we break down those support levels, let's see if the market makers can send it to a previous low or new lows. Okay, triple Q is around 528.9-ish right now. I have resistance at 529, which served as a tough sell zone area yesterday. And the fib level at 530.7. Those levels must clear. They put 532, 534 or higher in play. Trust no rejection from resistance levels as usual unless it's strong enough to break down a support level. Those levels I have are 527, 525.5, and the critical fib level at 524. Below 524 is when I would switch back to being bearish on triple Q. All right. Otherwise, if we can clear those resistance level, I'll definitely favor some more upside. Tesla is looking bearish still, but it had an inside candle setup. Is it finally starting to consolidate? Give the bulls a break. The bulls have been getting their butt kicked. But either way, I have resistant level at 344, 346, and the critical fib level at 347.5. If we are to get a bounce, those levels must clear to put 349, 350.5, 352 or higher in play. If it's time to head lower, well, 342, 340, 338 all must fail as support. I have this fib level at 339.69, but I'm rounding it to 340. I like my round numbers, my whole numbers. Yeah, I'll definitely look to short again. Put's been working, but just keep in mind, guys, we have an inside candle setup which indicates choppiness, consolidation incoming. Okay, so don't let your greed get to you. I know just shorting this thing this last few weeks has been amazing. Some of you guys are probably 6-figure traders now thanks to Tesla, but just keep it in check. Okay, we could be getting some consolidation, which means volatility will decrease a little bit. I'm hoping I'm wrong about that, and you guys know I've been wrong about a lot of things, but I'm usually not, okay, when it comes to the price action stuff. So just keep that in mind. I'd rather you guys play it safe than be sorry. You understand what I'm saying? Okay, NVDA. Now, one thing I want you guys to notice is how important that 129 level seems to be. Okay, we cleared 129 there. Let me change it to pink. And then we back tested it as a support there yesterday. So that 129 level is being respected by the market makers. We cleared it, retested it as a support, got a little bit of buying pressure. So as long as above 129, I have next resistance level at 131. Well, I have it at what is that? 132.2. Okay, so 131, 132.2. That was yesterday's high. And then 135. I'll be watching 135. Okay, so above 129. If we clear 131 and 132.2, we can definitely get a bounce back up to 135 and 136.5. That's fib level, and maybe even hit 140, another fib level. Now, when would I switch bearish on NVDA? When or if we break down 129. Okay, if we break down 129, yesterday's buying pressure gets invalidated. All the buying orders that was there yesterday, gone. And if they're gone, that should be nothing. There should be nothing to stop NVDA to go hit that 127, 125.5, and 124 level. Okay, so watch that 129 level today. IWM gap down and bounce right off that 222-ish fib level. All right, that's good for the bulls. Okay, but it was technically still a lower close, so good for the bears as well. If there's going to be more of a bounce today, 225 must clear first to put 226.4 fib level and playing above 226.4. I would favor a much higher bounce up higher. 229, 230.4 or higher would be in play. But if it is back to the downside we go, I have support at 223.5 and 222, especially that 222 level because there was some buying pressure there yesterday. So if we break that down today, that'll definitely be bearish in my opinion with 220 or lower incoming. All right. Apple has been, oh, that was my Discord. Apple has been, it's been bouncing. Strong bounce off that fib level at 228.4 yesterday. Continued to bounce. Well, this was Tuesday, and it continued to bounce yesterday. Paused just under my fib level at 237-ish. Okay, so got to clear 237 today if it wants to hit 240 or higher. All right. If it's a true rejection, because we kind of almost tested it yesterday. But if it's some bears follow through today, I have support at 235 and 233. Those levels must fail to put 230 and 228.4 back in play. And below 228.4, I would be bearish because, you know, that's what we had some strong buying pressure this week. So if it fails as support, those buying orders, those buying pressure, gone. And that would tell me that Apple's ready to head down lower. Now, Amazon, oh, you disappoint me. Amazon disappoint me. I try to predict Amazon. Yes, I said we was gonna get an explosive move. Well, you guys can see Uncle was wrong. Uncle was wrong. Hey, feel free to clown Uncle in the chat, and in the comment section. I get it, but we just gotta move forward when we're wrong about these things. Gotta move forward, put it behind us, and there's a reason why the windshield is bigger than the rear view mirror. Okay, you gotta keep your eyes forward. Okay. I tell you this though, we did not get that explosive move that Uncle was trying to predict, which was a terrible prediction, by the way. We did get a lower close than the previous day from Tuesday, and we did break down a critical fib level, which was at 229.4. And it's gapping down a little bit, just a little bit. So it's not an explosive move that I thought we'd get, but it seems to be making some progress as far as picking a direction goes, okay? And as long as below 229.4, Uncle's going to be bearish on Amazon. Breaking down 228 would definitely be bearish follow through and put 226.5 and 225 or lower in play, okay, guys? Trust no bounce or no reversal unless 229.4 can recapture to give us that false breakdown setup to put 231, 233, and 235 plus in play. I would favor a bottom is in above 233. Okay, so let's see what happens below 229.4. I'm going to remain bearish And loss of 228 would definitely trigger more puts if you're not already in it, okay? Trust no bounds unless 229.4 recaptures. Don't call a bottom, call the traps. Call the traps. Microsoft, I've been bearish on this ticker symbol here. And well, we did get a lower close yesterday, okay? Now, 410.7 is a critical fib level and rejected around that area yesterday. So as long as below it, I'm going to remain bearish. Breakdown of 409 and 407 would definitely send us a lot lower down to 405, 402, and 400, okay? I would not trust the bonds unless 409 and 410.7 can recapture. And that should put 412, 414, 415.5, 417, and 418.7 all back in play, all right? And here's Meta. Oh, Meta. Well, I have support at 720. Well, it's below 725. So yeah, I have next support at 723.5 and 722. If it's a pullback time, 723.5 and 722 must fail to put 720 and 716 all in play. All right. It looks like it's consolidating a little bit. It's the 1 hour chart. It looks like it's consolidating a little bit. If it does clear 725, then 727, 730, and 733 plus would all be in play. Please add these levels to your charts, chat. DXY is consolidating a little bit, bouncing right off of that 107.5 fib level that I have here. If there is to be more downside, 107.5 must fail to put 107, 106.5 or lower in play. If it is a bounce time, then 108 must recapture to put 108.6, 109, and 110 all back in play. Here is coin. Had a nice, a little small gap down yesterday, but it managed to recapture. I had a fib level at 265, and it gapped below it yesterday, but it managed to recapture that level intraday. Very, very beautiful bounce to the upside. It even cleared the 274 level and closed back above that 5 daily moving average. We're around 283 right now. Yeah, I have the next fib level resistant at 283.5 and then 285. These levels clear. More upside is possible for coin with 288 and 290 plus in play. I wouldn't try to short this unless 282 and 280 fail as support. And maybe we could put 274 or lower back in play. Below 274, I'd switch back to bearish on coin. But right now, guys, it's kind of looking bullish. Let's see if it can clear that next fib level at 283.5. DOGE. Well, those don't look bullish to me. It doesn't. And it's rejecting from that 26-ish cent area. I still cannot long unless 26 and 28 cents can recapture, especially 30 cents. Right now, looks like it's just back testing some loss levels and is rejecting, okay? That's all I got to say about Doge. Bitcoin, it could not clear that 98 and 100K level, and it's rejecting. So next critical support is at 95.7K. And if it fails, definitely more downside incoming for Bitcoin. All right, guys. Thank you guys so much for being here. Thank you guys so much for watching. You guys are amazing. You guys are master traders. And, you guys are here checking out Uncle Charters. And I really appreciate you guys so much. Thank you guys for coming. And come again and bring your friends. All right. Peace.